Good morning, everyone. Thank you for joining Ray and I on another segment of the Insurance House with Mike and Ray. Ray, good morning.
Good morning, Mike. How you doing?
Very well. Yourself?
Doing great. Doing great.
Good, good. Well, Ray and I are happy to join you guys today, and we had some great feedback on our first segment
Yeah, we did. Definitely.
when we had the Sharp Healthcare team and health plan team.
Yeah, the nonprofit group was definitely gave us a lot of insight regarding COVID and dispelling some of the misconceptions in the market. So yeah, we definitely had a lot of great feedback from that.
Yeah, thanks for everyone that gave us the remarks and the comments on the Sharp interview that Ray and I conducted. Today we also have a special guest again in the employee benefits segment. For those of you that we're coming up on a new year and well into the fourth quarter here, I think people start to think about what their employee benefits are going to look like in 2021.
Yeah, we have choice administrators, basically the senior vice president of sales and account management for choice administrators, Michael Payton, on today, and pretty excited to have him on. Definitely, they are an entity out there that's been doing this for quite some time in the market, offering a variety of different medical, dental, and vision plans. And so they definitely have their a pulse on what's going on and what possibly can be seen in the future in regards to employee benefits.
Yeah, so for people that don't know choice administrators or aren't familiar with them, Ray, tell us a little bit about the company. What do they bring to the table that might be different?
Well, I mean, they are since 1996. They are a private exchange, so they've been doing this a long time before Cover California was even in existence. And they basically have a different philosophy in the market of, in a traditional sense, when you're working directly with a medical carrier, you typically the burden of choosing plans, selecting what's the best for your employees falls on the employer. Their philosophy is completely different. Their philosophy is based on, hey, we offer you a variety of different carriers, a variety of different plan options. Employer, take the burden off of selecting what's best. Why don't you offer them all, and you just basically select what fits your budget. Totally different philosophy. It works in a variety of different cases, and I think it's a fit in many ways. And so they've been able to grow it, branch it out over the years, and they're definitely a force in the market.
So what carriers subscribe to their exchange?
At this point here, they have, in San Diego County, for example, they have Sharp, Kaiser, Anthem Blue Cross, United Healthcare, and HealthNet. And if you're in the LA County area, they also have Oscar Health Plan, which is the Cigna network.
So what you're saying is that for the employers out there that are listening, you can basically, as their broker.
Sure.
And for those that don't know, Ray is our employee benefits broker here at the office. He handles all the employee benefits plans for our customers. So as an employer, basically you could structure a plan for people, Ray, that will allow them to offer all these different carriers to their group, and each of the employees picks a carrier based on their needs and what they want.
Yeah, I mean, it definitely gives the employer a lot of flexibility, because as a broker, you find yourself year after year, employers, not all of them, but in a lot of cases, chasing the best rates, and hopping from one carrier to the other. Whereas if CalChoice, if you hop on their platform, they already have majority of the carriers on board. So really, it's a matter of picking which carriers are going to work for you within their platform. So there's less back and forth, and less
you don't
work.
have to transition every year.
Exactly.
And this way, the employee, if they wanted to change the carrier in the open enrollment period, they can change it without the employer having to change to a whole new insurance company. They stay with CalChoice.
Exactly.
And allow the employee to pick a different insurance company that they want to use.
Correct. Exactly.
Yeah.
It just makes it more seamless, more turnkey for the employee and the employer year after year.
Pretty good stuff.
Yeah.
Yeah, us here at the agency at Fusco and Orsini, we use CalChoice for our plan, our group health. We have since the beginning.
Yeah.
And are very happy with them. And I like the fact that our staff can choose which healthcare provider they want to use. What are we going to talk to Michael about? What are you going to ask him today, Ray?
Well, Michael is basically in charge of, for lack of a better way of saying it, of choice administrators from a sales and account manager capacity. So I like to know exactly what's on the horizon for choice administrators, from products, expansion of carriers. What do you think is on the horizon from the standpoint of, well, we just had an election going on. So
Yeah.
what's his 2 cents on, in regards to what it could impact, how it could impact insurance
Sure.
next 4 years?
Sure. And I think what about, are you going to ask him at all about like the Affordable Care Act or how that's going to play out in the future?
Well, it's part of the presidential race winner impact.
Yeah.
How what they see, what their people are telling them about it. I mean, I'm curious. I mean,
Yeah,
I have
makes
my own
sense.
opinions on it as well, but
Sure.
I'm curious to see what he has to say.
Yeah. So for the employers here that are listening, thanks for joining again. We're going to be back with Michael Payton of Choice Administrators. And I think we're going to have some great information and insight for you guys to prepare for the coming year ahead. So stay tuned and we'll be back. Thank you again, everyone, for joining Ray and I on the Insurance House today. Again, we're honored to have a special guest from Choice Administrators, Michael Payton. Michael is the Senior Vice President of Sales and Account Management at Choice Administrators, which is headquartered in Orange County, California. Michael, thank you again for joining us.
Thank you, Michael.
Yeah, thanks, Mike. Thanks, Ray. Appreciate it. It's a pleasure to be here.
Yeah, it's great. Thank you. And we know you're very busy and you have a lot on your plate, so we appreciate you carving out some time for us. Before we get started on some of the questions that I'm going to divert to Ray, because as I told our audience before, Ray is our employee benefits specialist here at Fusco Nursini. Can you tell us a little bit about your background, maybe where you're from, your education, and your career leading up to Choice Administrators?
Yeah, I'm happy to do that. You just probably a pretty typical story about how I ended this business, right? I really stumbled into it. I don't think anybody goes to college for the most part and majors in health insurance and doesn't know how they're going to get here. So, I was actually born and raised in Southern California. I'm a homegrown guy. I went to college in Arizona. I went to Arizona State University. Spent several years having a little bit of fun in the sun, and right out of school, I to a job fair and got at the job fair with Mutual New York, who was a young guy, years out of college, had a water ski boat, and had all sorts of promises and working Monday through Thursday, having fun on Friday. So I thought it would be an interesting job, and so I went to work at Mutual New York right out of college, and that was my first introduction to the insurance business. Ultimately, a little bit less than a year after I started there, I decided to move back from Arizona to California. I wanted to be back home, which where my family and friends were, and moved back here. Answered an ad in a newspaper, and I myself, in the Word and Brown family of companies, Cobra administration side of the business, and I spent 10 years kind of working, in the Cobra and FSA space, helping to build the organization that eventually went on to become this, that the Word and Brown family of companies has since sold off several years back. I left there and went to Pacificare over small business sales in the Southern California market for Pacificare, and stayed through the acquisition of United Healthcare. I was vice president of sales in the Southern California market for United Health for a handful of years, and then with my own agency before ultimately I decided to come back into this organization, and I've now been back here about 8.5 years now.
Yeah.
So, I'm 26, 27 years in the insurance industry. I've had the really good fortune of being able to work on all sides. I've been on the carrier side. I've been a broker. I have been on the TPA side. I mean, I really kind of understand and have seen all the pros and the cons and the trials and tribulations of really every side of the business. So it's helped kind of shape me in my thought process and where I'm at today. And that's my story.
Awesome. Thank you for sharing it. How many just before we get to Ray's questions,
Well,
how many people are you responsible for? overseeing now?
Okay, so as you mentioned, I'm the SVP of Sales and Account Management, and what that means within our organization is, in essence, I have all revenue responsibility for the company. So I have several business units that fall underneath my sphere of influence. I have new business sales, I have renewals, I have account management, I have sales operations and underwriting. So all in, I've got roughly 65 people within my organization. So my group is responsible for
Wow.
bringing the new business in, transitioning it, making sure gets put into the system, and then renewing it and keeping our distribution partners happy throughout the year.
Perfect. Yeah, I mean, you definitely have choice administrators does have a lot of weight that it's carrying around. I mean, I'm just looking at some of the metrics that you guys bring to the table. I mean, I was reading 18,000 employers under your umbrella right now, with what 320,000 employees and dependents covered right now. That's huge,
That's amazing.
massive.
Yeah, no, it's run, and actually, we've over the last couple of years, those numbers have even grown slightly. And when you look at both of our products as well, right? When you look at California Choice, so California Choice today, Ray, we just hit the 20,000 employer mark. We
Wow.
just topped 20,000, which we're incredibly proud of, right? I mean, 2021 is going to be our 25-year anniversary as a company. Choice administrators will have been around 25 years.
Yeah.
And so we finally hit the 20,000 employer mark in California Choice. We've got roughly 330,000 members, and then
Wow.
in Choice Builder, with our ancillary exchange, right, for dental and vision, chiro, acu, that kind of stuff, we've got another 8,000 employer groups in Choice Builder. So, all in, we're north of 460,000 members all in that we service from a insurance and TPA standpoint.
Yeah, no, definitely. I'm a broker, been in business for like 21 years now in the industry. I just like you, I've been in all facets of the industry. I've been on the TPA side. I was once upon a time a implementation manager for Benetrac. Once on the carrier side. I started on the carrier side myself with American Special Health Plans like 20 years ago, and been on the broker side for going on probably 14, 15 years now. So I definitely relate to your history as well on that. But yeah, I've known Choice administrators, known Cal Choice for a number of years, worked with you guys, and coming from those different facets, I mean, the traditional broker aspect of it, sometimes they have a difficult time wrapping their heads around Choice administrators of how to offer you whatnot. I mean, I've been working with you guys for a while, and I have recognized definitely the value of Choice administrators, and as a partner with you guys, we're definitely doing a lot of business because I do recognize the value you bring to the table, especially in these times. Having the flexibility, choice of options in the markets, and without having to jump, I guess, for lack of better way of saying it, jump ship from year after year, which I see a lot of companies do every year, chasing that rate. It does give them a multi-year option where they're not having to jump ship every year, which is great.
That's really an interesting point that you bring up, and it's one that I didn't plan on talking about, but I will underscore that for you.
Sure.
When we look at our block of business, and we're going into our 5th year, we do a lot of data analytics, looking at our book, not just kind of where our membership lies in carriers, but also the overall longevity and stickiness of the business. To your point, right? I mean, that's the beauty of a program like ours is you're not at the mercy of a single health plan and whatever type of renewal you get on an annual basis. When we look at our book of business, we have incredibly high renewal and retention percentages. I can tell you 2020 year to date, our overall renewals, which means those are the groups who actually make it to their renewal, right? They're on cycle.
Yeah.
We're renewing at over a 94.5% year to date for groups that make it to the renewal. And we only lose about another 5% of groups off cycle. We're into 89+% of groups from an overall persistency on cycle and off cycle terminations, which is incredibly high in this organization, in this industry.
Yeah.
And when we look at our
Very
book of
high.
business, at how long groups have been with us, our average group that we write stays with us for about 34 months on average. But if they get past the 34-month mark, they stay with us on average almost 9 years. So we have a ton of tenure with groups on the books, a lot of longstanding groups. We make a point to reach out to and recognize our groups, that have been with us
Yeah.
15, 20 plus years. So it's really a great program. And one of the things that I don't know if people really realize until they have an experience with California Choice, or even with Choice Builder, the ancillary exchange, is what the model does is the model really takes the purchasing power out of the employer group's hands, right? The
Yeah.
program is designed to help an employer fix their budget. They decide what they want to pay, not the insurance carrier. You let the employer decide, do they want to contribute a flat dollar amount? Do they want to contribute some sort of fixed percentage? But they can fix their budget while still providing quality health care. Let the employees make that decision, because ultimately, you guys know, healthcare is about 1/6 of our economy, right?
Yeah.
Everybody, each one of us has a different story to tell. Somebody in our family has been touched somehow and has needed healthcare. It is probably, outside of marriage or birth of a child or something. I mean, it is one of the most intimate decisions you can make as an individual, is what type of healthcare is best for you and your family. What do you need? So we always tell people, look, why are you, respectfully, Mr. Broker or Mr. General Agent, or even, Mr. Client, why are you making the purchasing decision for your employees? Let's just find your budget. Okay. Let's fix your budget, and then let's provide the broadest access to care you can get with the broadest selection of health plans. Most people ultimately really don't care what color their ID card is. They want to know if their physician is in network. They want to know if the facility that they want to access care to is available, but they don't care what color their ID card is, with exceptions, obviously. So
Sure.
that said, we always tell people, stay out of the purchasing decision. Let the employee decide how they want to access healthcare. And it's been a phenomenal model for us. And what the program is, and why it's so valuable for people, is because our program allows employees to really choose how best to use healthcare for their families. Nobody knows better than they do, right? Nobody knows better whether they need a richer benefit plan, or whether they skinnier benefit plan, whether they need a benefit that has a low copay maybe at a doctor's, or whether they need a lower benefit, or they could afford a higher benefit from an inpatient hospitalization standpoint. And so putting a single carrier model, and putting a limit on the number of selections that somebody can have, as well as the panel of doctors. Let's not forget drug formularies as well. Drug formularies are very different from health plan to health plan. So
Yeah.
we believe wholeheartedly, without a doubt, the person who should be making that decision is the employee working with their family and decide how they can consume healthcare and how they want to access healthcare the best. It's none of my business, none of anybody else's business other than the family. So that's ultimately we're trying to convey to the market. And we believe, looking at our growth pattern, particularly since the ACA took effect, and looking at our renewal rates and our statistics, we believe the model has validated itself. People want choice.
Yeah, definitely. I agree with that 100%. I mean, from my standpoint as a broker, especially in the small group market, employers under 100 employees, it's a great fit, great model. Just from the standpoint of, with ACA intact, I mean, as you and I know, ACA did nothing to reduce rates. It only increased rates across the boards. And so it really basically made, twisted employers' arms, so to speak, to trying to basically produce and offer a comprehensive health plan without breaking their budget. And that's where I think CalChoice is a really good fit. I think one of the hurdles in a traditional sense for CalChoice, which I get as a broker from being around the game for quite some time, but a lot of traditional brokers have a hard time moving past the hurdle of having those options, which it makes perfect sense to me, because with all this rise in healthcare costs and ergo rise in healthcare premiums, you need to offer plan flexibility. That's the counter to it.
Yeah, I like to use analogies a lot, right? I mean, I don't like to talk in, healthcare executive speak and use a lot of big words. I really like to kind of talk lowest common denominator. when I'm speaking in front of the market, or, you know, whether I'm talking to brokers or general agents or doing some sort of client symposium, here's the analogy that I would use. You know, I would say traditionally we have been a single carrier model since the inception of healthcare, right? I mean, that's what everybody knows. I mean, you were just talking about that, Ray. That's the model everybody knows. And, you know, that is the mind frame that people think in. And you've got to get outside of that mind frame. And I say most employers really have good intentions. Most employers want to provide health care for their employees. They believe it's the right thing to do, and it is the right thing to do. And it's very noble. They're spending their own money coming out of pocket to do that, right? But use this analogy. Imagine if you're an employer and you say, well, you know what? I'll tell you what I'm going to do. I'm going to take everybody to lunch. Lunch is on me today, right? Ray, what food do you not like? And maybe Ray, maybe you say to me, well, look, you know, I don't like broccoli. Okay.
Sure.
And I say, well, oh gosh, Ray, you know what, buddy, I'm sorry, but today I'm taking everybody to House of Broccoli. You know, and I know that your colleagues don't really like broccoli either, but that's kind of what I've picked today. You know, look, there's lots of types of broccoli. There's fried broccoli, there's steamed broccoli, there's boiled broccoli. You know, but really broccoli is what you're going to eat today. And you're going to have a lot of employees who go, damn, I like broccoli. This is good. But you're going to have other employees who kind of choke down that broccoli, and they can't wait for their next meal. And when you put somebody into a single carrier model, right, you're in essence doing the same thing. You're going to believe that you're really doing something good and noble, which is you're providing healthcare, right?
Yeah.
Doing something noble for your employees. But you're also probably forcing a couple of employees to choke down a healthcare plan that they don't want. And you're doing it for decisions that are best for you and your business. Well, the great news is choice administrators and the California Choice Program and the Choice Builder Program is not like going to the House of Broccoli, right?
Yeah.
It's like going to a traditional restaurant that has all different types of foods. And you find a restaurant that has a huge menu that has everything you could imagine on it. You can find something for everybody at all different price points and all different flavors to meet everybody's budget. So I always ask employers, or I ask brokers, why would you take somebody to the House of Broccoli when you can take them somewhere? You can take them somewhere that has a broad menu, right?
Exactly.
And sometimes an analogy like that, people kind of laugh and they chuckle, but they sit back and they go, you know, I mean, I guess it kind of makes sense, right? But
it does make sense.
that's what we've done for decades as a health insurance industry. We've crammed a single focus down employers' throats, and there is a better way to do it. And I'm here representing with choice.
Yeah, you are.
Choice is the way, man.
So Michael, it's an election year. Just want to ask you, you know, you're running a company, you know, right now we're still, you know, not sure who's going to win it.
In limbo, huh?
Yeah, still in limbo. But presidential race, a lot of stress around that.
Yeah.
Especially for us in employee benefits per se. I mean, you're running the company.
Yeah.
What do you see as far as the potential impact of presidential race as it applies to insurance?
Yeah, boy, that's a big question. I'm going to do my best to not step in a pile of it here today. You know, what I would tell you is this. I don't think no matter who wins ultimately the election, what the outcome is, I don't think we're going to see significant changes in our world for a long time. One thing that I can tell you, you know, I know all the health plan executives. I've spent a lot of time over the years talking to them about the impact of ACA and what it's meant on their business. And to unwind what the ACA implemented is a Herculean task. It is not something that can be done overnight. It is not something that can probably be done within a few years. What most people don't understand is the ACA and the implementation of that piece of legislation didn't just guarantee that people can get insurance coverage, right? It didn't just wipe out pre-existing conditions and some of those really popular things and those talking points that you hear in the media. It forced health plans to completely overhaul their legacy systems and rebuild the platforms that they administer business on and how they do it, rebuild all of their actuarial tables and models. It fundamentally changed the infrastructure, not just their products. It fundamentally changed the infrastructure of how those plans do business. And should the ACA be wiped out someday, that would be impossible in a short amount of time to get rid of that. And from what I understand from most of our partners, I don't think anybody thinks that option at this point forward. You know, I think you're going to continue to see, no matter who wins the election, I think you're going to continue to see pushes towards employee advantages. You know, I think there's been a lot of thought within the healthcare space that pre-existing conditions being covered, that's a good thing, right?
Yeah.
I know regardless of what the aisle people sit on, everybody thinks it's a good thing that we insure as many people as possible. So what I think is going to happen, because my best guess is, I'm sure everybody hears on the media, is I think we end up with a divided House of Congress. So I think we're probably going to end up with a lot more groups like we've had. And so from my perspective, at least, I think the quicker path change is in very small incremental, line item type wins versus passing any massive sweeping legislation. But I don't see the ACA going away. I don't see it going anywhere. I'm going to continue to see little small pieces of legislation that will, depending upon the outcome, will either tick away little pieces or Trump-proof pieces, or it will add to the current legislation we've got. I don't see a lot of change for us. I believe we're in a very strong industry. I believe we're in a very healthy industry. When you look at the ACA implemented, there was a tremendous amount of uncertainty with the health plans as to how it was going to impact their financials. They took their best guess, right, at what it was going to look like. But 2 years, right, the first couple of years of ACA, you guys are brokers. I mean, look at the increases you saw. Look at the trend numbers. They were enormous. Over the last 2 years, trend is under control. The health plans absolutely understand how to price to their risk nowadays. They understand how the risk adjusters are going to impact their financials, and they're able to price to those much better. And we see single digit trend, and we have for the last couple of years. And in the case of some of the plans out in the market, they're low single digits. It is not uncommon to see a health plan have 1 or 2 quarters throughout the year where they actually take a rate decrease. We've seen that in our program, over the last couple of years. So from my perspective, whether you like the ACA or not, and what side of the aisle you sit on, it seems to be under control from a pricing and a premium standpoint. Now, I didn't say cost containment, right? I mean, cost is a different issue. The cost of service, the cost of equipment, the legal issues that impact rates, all those various drivers of cost. I don't know that those are necessarily under control, but the health plans nowadays really understand how to rate this business and the impact that it's going to have on them. So, I don't a whole lot of change with the outcome of the election. I've got my hot dog cart and I'm out peddling hot dogs all day long, and I don't expect the streets to be closed for any.
Perfect. Thank you.
Great. Thanks, Michael. I wanted to ask you, I focus largely on the technology in our industry, from both, from the health insurance side, from InsurTech, and what type of efficiencies and enhancements we can provide our clients, which in your sense would also be your employers and your members. I'm wondering what types of enhancements, what type of innovation is CalChoice or Choice Administrators working towards to improve, the experience, the client experience for both employers and their employees or your members?
Boy, that's a $64,000 question. I could spend a long time talking about this one. I've got some really good news, so let me just spend, if you'll bear with me, I'll kind of let you know where we're at.
Yep.
When you look at the state of small business health insurance, if you will, most people would argue that the small business market from a technology standpoint is far behind the mid-market, large group, national account segments. They've implemented over the last several years various tools and technologies to be able to accommodate masses, right? Your average small business, who's working on a street somewhere or in a strip mall, and maybe some of their employees have computers, maybe some of their employees don't need computers where they can, utilize tools. The small group market has been much slower to adopt technology. That's one issue we have to overcome as an industry. You also have to look at the fact that most health plans still operate on legacy platforms. They're not on the most modern technology from a core system standpoint. Choice administrators being one of those, where I'm going with this, okay? We're still on an old legacy based platform. The great news is about a year ago, we kicked off what we're calling our choice transformation project, which is we've mapped out probably over a 3 to 5 year process, how we're going to completely get off of our legacy systems, and we're going to migrate everything from our core platform to all of the various business modules, whether it's a finance billing module, whether it's a document scanning module, whatever it is that plugs into our core database and our core administration system. We're modernizing everything. We are going to go to a lot of cloud-based type technology. We've engaged with one of the large IT transitional firms in the world to get their guidance and have them build out the roadmap of what are the edge best technologies in our space that we need to be able to do our business, and they're helping us identify those. We're going through department by department, looking at each system and each kind of play module that our departments use as a part of the overall administrative process, and mapping out and sequencing how we're going to implement those over time. So it's not just going to be us, hey, it's going to take us 3 to 5 to build this out, and then big bang, all of a sudden we've got a new system, right? We're going to piece by piece implement technology over the next several years that will get us to an end game where everything has been modernized. That's number one. We believe that is going to save us a lot of headache and a lot of revenue that we have to currently invest today to continue to update and provide maintenance on systems that are just outdated. They work and they do the job, and they do the job well, but require a lot more effort to keep running than modern platforms do. Secondly, where this is really going to be positive and where this is going to be impactful for our customer distribution partners is we're in process of modernizing our website. And when I say modernizing, I mean everything from the look and feel to the transactions and the things that different users will be able to have on the tool. We had actually hoped to launch it by Q4 of this year. That was our original intent. Right now, we're looking at a Q1 launch, but I can tell you this, as brokers, you guys are going to love it. So we're modernizing the website in multiple phases. So when we launch it originally here in the first quarter next year, it's not going to have all the functionality, but we're building out functionality beyond what we have today for our broker partners, general agent partners, groups, members, everybody. All of our core audiences who we work with will have access to a lot more detailed information quicker at their fingertips. Everything transactionally as it relates to eligibility. So it's going to be I don't want to use the word more of a self-service platform, because self-service isn't always necessarily a good thing, right? But it's at least going to provide a much more accessible user experience to the data that we have and house within our system, and visibility to the timeliness of various transactions that are taking place moving around throughout the operational process. So we've got a lot of really good things coming. Those really just a couple of things I'll touch on. But
Perfect.
we're also building activity with many of our distribution partners, our GA partner. You may have seen a press release recently by the company Vericred. Vericred is a huge national aggregator of data and API services in between parties. Us, Kaiser Permanente, some other health plans have recently contracted with Vericred to provide that kind of API connectivity service. Vericred is connected with different Ben admin platforms and other vendors out in the marketplace. So as we kind of build out that API technology, using a middleman, if you will, it'll give us that ability to kind of have that one-to-many connectivity where we can, utilize a single API feed that functions and works with our system to be able to connect with multiple vendors and multiple platforms that brokers and groups are using to provide that connectivity. So every area you can imagine, we're in process of modernizing. We believe that we want to lead the market in that space, and we're making every effort and every investment right now to make that a reality.
Awesome. Perfect. Well, with that said, we're talking a lot about the future of CalChoice and what's on the horizon soon to be here. It sounds like, but looking at more further in the future for CalChoice, as a broker, a couple of questions on the surface. Anything on the horizon for other future partnerships with other carriers? And is there any thought about expansion to large group?
Well, I guess I answer that question with a sly smile, and I say, Ray, there's always things on the horizon.
Yeah.
This is a subject, I guess, near and dear to me. Being the guy that owns revenue and product and sales for my organization, it's one of my key areas of focus. And we're always in the middle of dialogue with both existing partners and organizations that we're not partners with to see what opportunities we may have to continue to improve the program. I will just tell you that in 2021, we will be having more product and some great new options within the portfolio. Whether it's CalChoice, Choice Builder, we're always looking at everything. So as much as I'd like to let the cat out of the bag, I'm gonna keep it closed today. But know that there's some good stuff coming, right? You also asked about large group. That's an area that I wrestle with. I would like to have a large group product. We, as you probably know, we used to have a large group product, and then when the ACA took effect, and here in California, small group went up to and stayed at 100. Our 51 to 100 large group product was really it was a moot point, right? We had to close it down because that market segment is just small group. But I wouldn't say that it's never going to happen. I would say, a lot of things have to go right. The ACA has certainly changed the way that health plans are looking at their financials in different segments. I would also say that for us to be able to quote large groups, back in the day, that wasn't always the easiest thing, right? We had 3 different carriers from a medical standpoint, and we had to go to those carriers. And we had to get separate independent quotes from each of them and then integrate that into a single quote. It was very time consuming to quote. So I wouldn't want to launch any type of large group product or even look at going down that road unless we had some commitments from some plan partners to operationally be able to do some things from a rating and a quoting standpoint. Again, I go back to fundamentally, who are we as an organization? And, we're about choice. We're about ease of use, right? We're about simplicity. And when you get into an experience rated product that's not predictable for an employer, right? Because that's one of our values, that predictability for an employer, that budgetability. Now we're kind of getting out of what our core message is.
Exactly.
Not to say that we may not get there one day, but as of right now, I'll tell you with confidence, I wouldn't expect to see any large group product anytime soon.
Gotcha.
Makes perfect sense.
Thank you for that. Yeah, it does make sense.
Well, Michael, again, we're very grateful for your time. Before we leave, I just maybe wanted to ask you, for the audience to hear, about some background on those awesome guitars that you have in the background there, man.
Yeah.
And maybe your choice of bands or what type of music you like.
Well, I don't know how I politely decline this. Maybe I'll just say, Mike and Ray, you guys can't reach the tip jar from there, so it's probably not going to happen. No, look, guys, in all seriousness, I really appreciate you, having me on today, giving me the opportunity to share a little bit about myself and our organization. And, I'll leave your audience with the thoughts of, you guys are great, and you've been great business partners, great distribution partners for us. I know everybody on our team who works with you appreciates your professionalism and loves working with you guys. You guys have been great. We're excited about what the future holds for our partnership, working together as one of our top brokers. So thanks for having me today. I
Yeah,
appreciate
that's
the
awesome.
support from the bottom of my heart.
No, we appreciate it. We
Yes.
love the team at CalChoice. And we're, as members and
Ourselves.
employers, CalChoice, since I could start to offer a health plan, which was, I don't know, maybe 8, 9, 10 years ago now. We love it. And our employers, the employees that sit in our office love it. And everything you spoke about today, it resonates with us because that's what we believe in too. So thank you for the product and for the team that you've assembled and
And
the opportunity to work with them.
Thank you, guys. Hope you both have a great rest of the week. And if I don't get a chance to talk to you, have a great holidays, with you and your loved ones. And we appreciate everything.
Thank you, Michael. Same to you.
Thank you, Michael. Same to you.
Take care, guys.
Bye-bye.
You too. Take care. Thank you, everyone, again for joining Ray and I. We were very thankful and honored to have Michael Payton join us from Choice Administrators. We hope you enjoyed the information that he provided to give you some more clarity into the health insurance market and from the offerings of Choice Administrators. Remember to follow us on YouTube and subscribe to our social media channels. And we look forward to seeing you on the next segment of the Insurance House. Thanks again.
Thank you.